Everyone has that friend. The one who's always talking about the next big crypto launch, the secret penny stock that's about to explode, or the can't-miss NFT drop. They're chasing the hot investment. They're convinced this is the shortcut to $1 million. But look at the true self-made millionaires, the people who have actually built generational wealth. You'll notice something strange. They are almost entirely absent from the hot investment scene. They aren't in the Telegram groups. They aren't refreshing the charts. And they aren't betting their future on the next hype cycle. Why? Because they know something everyone else is dying to ignore. Today, I'm going to show you why chasing hot investments is actually the quickest way to lose money, and what the ultra-wealthy do instead. The trap of convenience. The reason hot investments are so attractive is simple. They promise convenience. They promise a massive payout with almost no effort. It's the ultimate dream of free money. But real wealth is rarely convenient. Building a business is hard. Buying and managing real estate is hard. Investing in boring, proven industries for 20 years is hard. Hot investments aren't selling you a path to wealth. They're selling you a fantasy of convenience. And whenever you prioritize convenience over fundamental value, you're not investing. You're paying for a comforting illusion. Speculation versus ownership. The biggest difference between the gambler and the millionaire is ownership. When you buy a hot coin or a speculative stock because you hope the price will go up, you're speculating. You own a digital token or a ticker symbol that has no intrinsic value other than what someone else is willing to pay for it later. That is hope, not strategy. The millionaire buys ownership. They buy companies that generate profit. They buy assets that have customers, cash flow, and real-world value. They don't care what the price does tomorrow. They care about what the business generates over the next decade. Ownership creates power. Speculation relies on luck. The hype cycle is a distraction. The hype cycle is designed to lure in the retail investor. It's a mechanism for the sophisticated insiders to offload their assets onto the hopeful masses. Think about how it works. The price starts moving, the influencers start shouting, and suddenly, the hot investment is everywhere. By the time you hear about it, the big winners have already positioned themselves. Millionaires understand that the noise is a distraction. They don't look at the news, they look at the numbers. They know that if it's hot, it's probably already too late. True opportunity is often boring, unnoticed, and completely silent. The 20-year horizon. If you want to get rich quick, you'll end up getting poor quick. Millionaires build wealth on a 20-year horizon. They make decisions today that will pay off in 2 decades. They aren't looking for a 100% gain this week. They're looking for a 10% annual return compounded over 20 years. The hot investment crowd is looking at the 5-minute chart. The millionaire is looking at the decade-long trend. If you don't have the patience to be rich slowly, you'll never have the discipline to be rich quickly. Wealth is a long-term game played by the patient. Focus on value creation, not value capture. The hot investment game is purely about value capture, trying to get a bigger piece of a shrinking or stagnant pie. Billionaires focus on value creation. They identify a real problem and build a solution that serves millions of people. When you create value, wealth naturally flows back to you as a byproduct. When you chase hot investments, you're competing with millions of other people trying to do the exact same thing. When you create value, you're the only one providing the solution you've built. Stop trying to capture someone else's value. Start creating your own. It's time to stop looking for the shortcut. The shortcut isn't a hot investment. It's a hard-earned, disciplined focus on fundamental value, long-term ownership, and real-world utility. Stop watching the charts. Start watching the value. That's how they do it.